Okay, welcome to the Swing Trading with Cycles channel. Happy New Year. It is January 3rd, 2023. It's about 11 a.m., so market's been trading for a couple hours now. We're going to review natural gas today. As always, we're going to use the natural gas futures, and we're going to just see. We're going to continue our series. I've been putting out videos on this probably since early December. Really, in terms of the price action, it was right around here when we were consolidating here. And we've obviously broken down since, and we've been kind of documenting this whole thing. Cycles is a very important way to conceptualize trend analysis. Take a look for a pinned comment. So it'll be at the top of the comment section. Ton of great reference materials in there for you. A playlist with two videos about cycles analysis. You'll see the playlist that has all the natural gas videos, so you can see the previous videos, get up to speed. And then also a video that talks about swing highs and swing lows. Again, really important concepts within price action. This channel is all about trend analysis. We don't talk about fundamentals. I saw some questions in the comments about fundamentals, delivery, all that stuff. Not here. This channel, we review all assets. In this video, we're doing natural gas, but the focus is on trend analysis because prices trend. Sometimes they're trending higher, sometimes they're trending lower, sometimes they're consolidating, they're moving sideways in a range, so they're not trending. But that's all that prices can do. It can either trend in one of the two directions that something can trend in, or it can consolidate. Right now, we are trending lower. We have been for quite some time. We've been talking about this. My target is the $3.60 range for natural gas. We're not very far from that now. We've opened here, or we're here around $4 now. And so, again, get caught up on that cycles analysis, but I'm going to talk through this. This is day 18 of a daily cycle. So we'll start with the daily chart here. This is your weekly cycle, so potentially week 10. And if we think about our long-term cycle, our 3-year cycle, for instance, this is month 31. So notice cycles exist on all time frames, and that's a big theme of this channel, multiple time frame analysis. Analyzing price action on multiple time frames, it allows you to potentially anticipate moves. If you can see some bullishness on the daily chart, and you're monitoring the weekly chart, you can understand how that daily bullishness is going to convert the weekly chart. And so you can get in ahead of a trade. Same thing goes for the monthly, right? Once the weekly starts to get bullish, the monthly may do the same, right? And you can set clear levels to understand the likelihood of that. What levels do we need to get above? What levels do we need to stay above, get below, etc. So it's day 18. We've seen that these cycles tend to be in the 25 to 35 day range. And so day 18 would be really early to get our low. And so as we talked about in previous videos, just kind of scenario planning, not a prediction, but a scenario. If we say this is like a 28, 29 day cycle, you could see a world where we get our low around January 20th, like call it the middle to end of January. So still another couple weeks of downside. Now that doesn't mean we're going to fall in a straight line. In fact, this is a pretty dramatic move lower. As I've been talking about in the videos, I mean, this is almost like a straight shot lower. You expect at some point some kind of lower high before the lower low, before that final flush. And so, that, again, doesn't mean we're going to fall in a straight line for the rest of January, but we would expect to be making lower lows and lower highs into late to early January. And that's not because there's some mystical, like, a cycle has to last 30 days, or it's just this is the behavior that we've observed, right? That when you combine the rallying phase and the consolidation phase, it tends to be in the 30-day range. And so 18 days is just really early. Now, importantly, what does this mean for the weekly, right? If we're going to get our low somewhere around, potentially get our low for the daily cycle somewhere around the end of January, that means that we would rally for another couple of weeks. And so in terms of the weekly cycle, so go back to the daily cycle really quickly. This is a very bearish daily cycle, and you'll see that in the reference material, in that it has a very early high. So, which is to say, another way of saying that is this rally only lasted 5 days. That's what this 5 means, right? So this is day 1, day 2, day 3, day 4, day 5. That's our high. That's it. Rally's over. We consolidate a little bit, and now we're moving lower. So we've rallied for 5 days, and since this is day 18, that's easy math. 18 minus 5 means we've been declining for 13 days. That's what a left translated cycle is, a cycle that rallies for less time than it declines. And so we know we're in a left translated daily cycle. And on the weekly cycle, we're also left translated. So there are two ways that you could read this. One is that the previous weekly cycle was short at 16 weeks, and we got our low the week of October 26th. That's this big, beautiful swing low here. but then we only rallied for 4 weeks. Remember how we had like we just talked about a feeble daily cycle rally for 5 days? Well, this is the equivalent on the weekly level, but even shorter. It's 4 weeks, not even 5 weeks. So this is week 1, week 2, week 3, week 4. That's our high. We start to decline. So that's one interpretation, and this would be week 4, and this is actually week 10. The same way that weekly cycles tend to have a general length to them, or excuse me, daily cycles. The same thing goes for weekly cycles, right? So again, this was a pretty short one here. The previous one at 16 weeks, but then this one was 26 weeks. The one before that was 41. The precise number is irrelevant because we're not trying to predict a precise number. That's not what you're doing. You want to estimate around what time do we generally get the low. How long does a rally or decline usually last, right? So there are 2 ways we can think about this. Let's just say we have another really short cycle that's 16 weeks. Ooh, right? That would mean that we wouldn't expect our weekly low until the middle of February. So this is a week of February 13th. The other interpretation is that maybe this whole thing is one cycle, right? Which is to say, this is not a weekly cycle low. It's just a halfway point, like part of this larger decline. In which case, this is still a bearish weekly cycle because it means now that the high is week 7 and this would be week 26. I hope you're seeing that, right? If this whole thing is 10 weeks, then you just add these 10 weeks to this 26. So like instead of this, so I don't want to confuse folks. So instead of this being week 10 of a new weekly cycle, it would just be week 26 of this same weekly cycle because this is not the low. It doesn't really matter how you count it because, as I just said, in one scenario, in both scenarios, it's left translated, right? In one case, we topped out on week 7 and we've been declining for, 19 weeks. And in another scenario, we topped out on week 4 and we've been declining for 6 weeks. But where it does matter is if this is actually week 26, then we would expect that this daily cycle low that's coming up is going to actually also be a weekly cycle low, potentially, right? Like on week 28, let's call it. And so we may see a stronger rally. We're not going to know that until we see the price action. There's no sense in trying to predict it, but we can at least be prepared for it, right? Like something like that, right? Versus if this is just another daily cycle low and we're continuing the weekly cycle decline, we'll probably get something more like that. Right? Like it'll be a really short rally. That's just a few weeks versus like 2 weeks maybe at most. Because think about that. This previous cycle that was really bearish topped out on day 5. It doesn't mean this next cycle will top out exactly on day 5, but you probably won't get past like day 7, 8, maybe 10, right? Like you think about, look at this daily cycle. Topped out on exactly day 5. Now I do think that's just a coincidence. That doesn't mean there's 5 is some kind of magic number. The point is it would be a short rally. So that's what we would be watching for, right? So something that if you imagine we continue a little bit lower, or not a little bit lower, but quite a bit actually, then we get this little bounce 5, 6, 7 days, and then we make another new low and continue another daily cycle decline. That's part of the weekly cycle decline. So let's look at the monthly chart. That was the other just big tell. This thing had a big red month. We've been talking about this. You can see this area, this cluster here, right around 350 is like a magnet, right? And given how fast we've gotten down there, that puts this area in play here. Like I'd say this, like just this general area. Like you can see for 1, 2, 3, 4, 5, 6, 7 months. This is a monthly chart. We kind of went nowhere more or less. I mean, these are pretty big percentage gains, to be fair, for some of these months. But notice, like, we're not really trending here. We're consolidating. This is a trend up. This is a trend up, right? And so you could see a world where we could get into this, like anywhere from, like, right below $3 to, like, $2.50. That would not be crazy. Would not be surprised to see price get, like, a leg lower. And that would probably, you could see a world where we get our daily cycle low around the 350 area. We get a little feeble bounce, and then we get our flush lower to like the 240s. Again, not a prediction, a scenario. As we watch the price action in real time, we'll have a better and better sense of if that is what is unfolding, and we'll be able to position accordingly. The other thing to note is that this August was month 26 of this long rally. Again, think about that. We talk about daily cycles. We talked about weekly cycles. This is your longer term cycle. So this is like a 3-year cycle, for instance. This is month 31. So we're in the declining phase. We rallied for 26 months and we've been declining for about 5 months now. And, if this is a 36-month cycle, 3 years, it doesn't mean it's going to be on the dot, but you could see a world where we still have several months of downside to complete this cycle low. And that's what could take us down to like this area here. Not saying that we're definitely going to get there, but that's something that you want to start to prepare yourself for as we see the more price action. And we will absolutely be doing updates on this channel. Now, I want to take a minute to talk about BOIL and KOLD because I know that's how a lot of people have exposure to this. I saw some comments in the notes section. So BOIL is the bullish version, right? So like if you're bullish, like it's leveraged though, so incredibly dangerous. Like you can see, this is the all-time chart. I mean, this thing was making all-time. This thing has just made an all-time low today, right? And obviously, natural gas hasn't made an all-time low. That's the way these leveraged ETFs work, and so you want to be kind of careful. They decay. But the point here is that let's look at the daily chart. So we gapped down, which is not surprising because natural gas was down so much, like 9-10%, I think it is, opened around $4. But notice that we've gone green for the day. So we're trying to reverse on lower time frames. Let's look at like a 5-minute chart. Okay, that's interesting. So looking at the micro here, this was our opening candle or our opening 5-minute candle. And then we had this little uptrend here. Like we trended higher for like 20 minutes. And then we started a little downtrend. We made a lower low, lower high, lower low. This is a higher high, right? And now we're just kind of consolidating here, right? Probably trying to make a move higher. Again, price is down by so much. You would expect a bounce. Price can't go down or up in a straight line. You have to get, there are going to be retracements. So that's not surprising. Yet at the same time, this thing is making all-time lows, and it's just like a stock that's making all-time highs. It's going to just continue to make all-time lows, right? It's not going to stop. Like, there's not some kind of magic number. Like, okay, well, 15 is just going to stay. It's going to just stay there. And to get a sense of, the other side of this trade, let's look at KOLD, which is the bearish. We'll turn this to a daily chart. It's the bearish natural gas ETF. And I talked about this in the previous video. Look at these last 5 days where we made higher highs, but we closed red. So really tough to stay long. I mean, it's tough to play this move with this vehicle. I mean, it's kind of tough. I wouldn't be surprised if we got a gap fill here. I mean, we're definitely going to get a gap fill like on the other side, like much later. But I wouldn't be surprised maybe we even get a gap fill this week and we get a little bit of a rally for natural gas, a little bounce. But if we think about near-term price targets, let's look at the weekly chart. Just like natural gas is seeking out some obvious pivots to the downside, this one is seeking out an obvious pivot here around 40, just under $44 in that neighborhood. I would suspect if we get to 360, we'll get to 45 on this, and that's a 50% upside from here. And then if we really get that washout to, like the mid twos, that's where you could see us trading, closer to like 65, anywhere from like 65 to like 70, 80, right? The same way that these things overshoot to the downside, they're going to, overshoot to the upside as well. Again, none of this is ever financial advice. This is dangerous stuff. This thing is not something that you hold on to because sooner or later it will make a new all-time low. This thing is on a trend lower. That's just how these things work. They're trading vehicles and nothing more. But I'd say if you're new to this channel, welcome. If you're in some kind of involved in natural gas in some way, maybe you started trading it because of the weather. You're hearing it's going to be really cold, so wow, that must be bullish for natural gas prices. Please, I mean, it's a new year, 2023. Make that one of your New Year's resolutions that you're not going to buy into downtrends. That's what we do in this channel. We try to help people avoid buying into downtrends. And most importantly, we spot uptrends early, right? This is a long-term cycle low that we have reason to believe the rally is going to last for many months. This is the time to get in, right? Higher highs and higher lows. That's what you want to be on the right side of, not lower lows and lower highs. We don't predict things on this channel. We analyze price so that we can understand the trend. So again, if you're new, welcome. Thank you for watching today and looking very much forward to helping people A, avoid losing money in 2023, because in general, the broader market is trending lower. That's important to know about. And B, if you're aggressive, find opportunities to make money, potentially on the short side. And of course, there'll be some things that are going to be rallying to the upside, even in light of this bear market. But thanks again for watching, folks, and just stay safe out there.